How's it going, everybody? It's Stas here. So the stock market had a pretty choppy day today. S&P 500 up $2, up 0.06%. Dow Jones up $46, up about 0.2%. And the Nasdaq tech stocks struggled today. Nasdaq down $127, down 1.1%. And on the flip side, the Russell small caps did very well, up $24, up about 1.6%. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over the top stocks that I'm looking to buy right now as we're getting deeper into the month of August, as well as what I've been buying. I want to go over what I've been doing here in the markets as of late. We'll talk about some recent earnings reports, numbers that came out today in terms of jobs numbers, and we'll just briefly glance over the jobless claims numbers as well. So a lot to talk about today. If you all find value in the video, hit that like button for me, consider subscribing to the channel, and get your 2 free stocks. Link down below in the description box. All you have to do is deposit $100 into the Webull account, and you get 2 free stocks valued up to $1,400. I also get 2 free stocks valued up to $1,400 since it is an affiliate link, but if you guys find value in the videos, that is one way that you can support me, and it's free money at the end of the day, and I do appreciate you guys if you do support the channel that way. So without further ado, let's get right into the video, kicking it off with the S&P 500, again, up $2, up 0.06% today. So nothing crazy of a day, but we have some price action here that tells us the bulls won the day overall. And it's pretty obvious here on the 5-day, 5-minute, and it's pretty easy to see it. You can see today, we actually, and this is where the bulls took over and really solidified the win for the day. You can see at about 2:10 p.m. Eastern Standard here, we were selling off. I mean, the S&P, the markets were, again, choppy today. They were red for a bit of the day. The S&P was down at this point, and it ended up holding 3330. And 3330 has been a level we've talked about for a couple days here on the channel, honestly for a couple weeks, because it stems back to the old all-time high from back in January, right around 3330. You know, that was a pretty big level that we were watching this week, right? And if we go back to that 5-day, 5-minute chart, notice how we were struggling at 3330 on the 5th of August, on the 6th of August, and yesterday we took out that level of resistance, right? We took out that old all-time high, and now it seems like, right, we're on our way to the actual all-time high around 3390. So the fact that we took it out yesterday was a really good move from the bulls, and the fact that we pulled down and we retested it as a new support today and rallied into the close, that's even better for the bulls. And honestly, it's a very slight high here, but we did hit a high when it comes to this week on the S&P 500, literally at what was it, 3:45 Eastern Standard, and it was by a really slight margin. Honestly, we're still at a pretty big resistance around 3350, but I still figured to let you guys know, I mean, we did hit a high, so that is a good sign for the bulls. But ultimately, I'd like to see a full-on break out of 3350 and a move up to 3390, which again is that all-time high that the S&P is gunning for at this point in time. So overall, very strong day for the bulls out there. And honestly, when it comes down to a potential cool-off coming, I don't know if I see it at this point in time. There's a lot of moving factors. There's a lot of things that go into this, especially at this point in time with stimulus, the economy suffering. We're getting all of these economic numbers thrown at us all the time. We have earnings, so much things, so many things are going on. And at this point, it's difficult to predict where we're going to go. But with the looks of it and us most likely getting stimulus here within the next 1-2 weeks, whenever it's going to happen, right? This is not a stimulus channel. We talk strictly stocks, but if you guys follow that, you know what's going on, and you guys know how that affects the stock market, right? And, in terms of these numbers that we're talking about, we got some jobs numbers today. U.S. economy added another 1.8 million jobs in July, beating the 1.48 million expectations. So we got that beat, which is good, but one thing that we notice clearly is it's not as many jobs as were added in June. Back in June, we added 4.8 million jobs, and one could argue, and it's pretty obvious here, that is the initial snapback that the economy had, right? That 4.8 million jobs added. And now that we're getting more cases these past couple of weeks, although that, I guess, yeah, that is included in the July data because July was really the month that we did start getting more cases. That definitely impacted these jobs as businesses out there were starting to get a bit scared. Are we going to have to reclose again? Are we not going to be able to be in business? So why would they hire more people, bring back more jobs with that fear on top of them of, hey, maybe we close down again. So that is why, we didn't get a massive amount of jobs, beating June. And I don't even know if we would have beaten June if, let's say, the cases were to drop and, there weren't a spike in cases and there wasn't this risk of a big second wave coming. Maybe we would have beaten it, who knows, but either way, it beat estimations, which is good, and the unemployment rate fell to 10.2%, and we've seen it at 14% was its high, a little bit over 14, 13%, 12%. Now it's at 10%, but it's still above what it was back in the Great Recession, which is just a side note there. It reached 10% back in October of 2009. So there's a lot of data being thrown at us, a lot of situations going on here. So it's difficult to tell whether or not we're going to cool off. I'm thinking that it heavily relies on, the vaccine. I mean, if we get more positive news around this and stimulus, there's no way that I'm not saying there's no way, okay, there is a possibility, but it's a lower likelihood that we're going to go down than up, right? I think there's a lot more likelihood we're going to go up in a situation where we get more optimism about the vaccine, the economy getting back to normal, and more stimulus being pushed into the stock market. So we really could go either way, and check 3350 again. Heading into next week, if we take that level out on a technical basis, that is where we could be going higher here on the S&P 500. And when it comes down to the Dow, again up $46 today, hit a high for the week, same as the S&P, and it seems like we're closing the gap pretty close to where we were back in the beginning of June. So for next week, watch out what happens at 27,500. If we break that out, if we break out of that, if we gap out of that on Sunday futures, Monday morning futures market, whatever, that could indicate we may be going higher. 28,200 is the next big target here on the Dow Jones. And if 27.5 fails, guys, a healthier spot for the Dow, as we are getting a bit overbought here, RSI is above 70. A healthier spot we could go to is maybe 27,000 flat, and under that, maybe around 26,700, 26,800, right around this 50 SMA here on the 4-hour chart. So those are some points to keep an eye out for when it comes to the Dow Jones here. Nasdaq again down 127 points. But did we hit an all-time high this morning? Don't even tell me, guys. No. We almost did. That's the truth. We almost did. So close. But the all-time high was still from yesterday around 11,282. And we've really been calling out the Nasdaq price action pretty accurately this week, right? We talked about how in the beginning of the week we held 11K. This was really good. And then once we saw that rally, I think this was on Tuesday, heading into the close, and the gap up on Wednesday. I mean, it was, horses, what's the saying there? Off to the races, right? Horses off to the race at that point. We gapped up, we hit 11,100, then we saw that massive rally the next day, and we've pulled down from there. But the truth is, guys, we're still in an uptrend. Bulls are still in charge. We're holding 11K, which is a big level of support. I mean, we're holding 11,100 heading into the close today, which is a big level of support on the Nasdaq as well. So I'm thinking that this is a healthy pull down. I mean, the bulls kind of took in charge later in the day, as you can see the recovery here and the rally. So I'm not worried I'm really not worried at all for this being the start of, let's say, the Nasdaq dump or whatever. I don't think it is. It could be if 11,000 breaks. If 11,000 breaks and we get back to 10,800, 900, that's where we might see a pull down, maybe to the 50 SMA on the 4-hour chart, this green line that you guys are seeing here. But until then, I think we're heading higher here overall, and there's a lot of tensions around China and the U.S. as well. There's just so much going on, so it's difficult and to time things right now. Difficult to really predict. I mean, it's difficult all the time, but really hard at these times. And that's why I haven't been doing a crazy amount of trading, and I've been cautious. And I've been talking about that here on the channel, how I've been stacking up cash. I've been buying gold, right? I have 2 Maple Leaf Canadian quarter-ounce coins coming in here soon. I've been buying gold for the past couple of months with a really small, a small amount of my overall portfolio, but that's kind of where my mindset is now. I'm buying some gold, I'm stacking some cash. Yeah, I'm buying some stocks, I'm averaging in, and I'm swing trading and doing a little day trading, but I'm being cautious, right? I'm being cautious. That that's kind of what I'm getting across here to you guys. So let me know down below in the comments, what are your thoughts on the markets, everything going on. And jobless claims, let me just throw this in. I almost forgot. We talked about it yesterday, but they were actually in at a new low of 1.19 million, but still above the 1 million level for the 20th straight week. But we actually broke the 2-week reacceleration. We're now, again, dropping down in price, but overall jobless claims, the trend's kind of headed back down, which is good, and we'll see how overall this does end up affecting the markets heading forward. And like I mentioned before, right, I'm not doing a crazy amount of trading at this point today. I didn't really do much at all. I'm in a bunch of swing trades, and honestly, I lost money. I didn't book a loss. I didn't book a realized loss. It's unrealized losses, but I'm down a pretty decent amount here on Fastly, FSLY. I got into this one yesterday at $91, guys, believe it or not. But like I said in yesterday's video, I'm in with a very small position, and I'm willing to let the volatility ride out on this one and maybe even buy in on the dip, right? And it's down here about 11.5%, down $10, and it's because of TikTok. I think TikTok is one of its bigger companies. Fastly stock here, one of its customers rather. You can see Fastly stock continues to dive on concerns about its ties to TikTok, right? And of course, TikTok at this point, that ties into the U.S. tensions right now. People in China, I'm not Chinese, obviously. I haven't been to China ever, but what I'm hearing is people in China, from what I've heard, right, they're very mad about what's going on right now with Microsoft or whatever U.S. company, the government trying to buy TikTok, the government in the U.S. banning TikTok. They're pretty pissed about that. And a lot of people here in the U.S. are mad about it as well. And I know a lot of people want them to ban it. There's a lot of pullback back and forth. And people are saying, this could be bad for the future relationship between China and the U.S., right? Because let's say the U.S. bans TikTok, then what happens if China goes and says, all right, we're banning Apple, right? Or Huawei buys Apple's portion of the business, or we're not letting Microsoft do business in China, since they do a lot of business in China. So there's a lot of nuances in this that you guys have to kind of think deeper into, because I know at first I was like, oh yeah, let's buy TikTok, whatever, let's ban TikTok, whatever. But as I sat and thought deeper into it, I was like, wait a second. This could be bad for Apple, Microsoft, or any other U.S. companies that do business in China. So think about it like that. That's a little tip there. And Fastly, FSLY, again, it's struggling because of that. I did not cut my losses. This is This is a pretty big loss for me at this point, but again, dollar value, it's not a big position, which is why I scale into my positions because of things like this, situations like this. So now I have the capital that, okay, maybe I could end up adding more to Fastly on Monday, Tuesday. Let's see what happens with TikTok. If it consolidates, we'll see what happens. And yeah, so I'm in Fastly at around $91, down a decent chunk there. I'm also in Netflix, which I am now down a little bit on Netflix. Crazy how the tides have turned. I was on up on Netflix here, did not lock in profits, but my average cost basis is around $4.97-ish, so I'm down about $2-3 per share on the stock. But ultimately, this is a longer-term swing trade for me, so I'm not sweating it. And honestly, if we go down to $4.75, $4.80, I actually might average down. That's kind of how bullish I am on Netflix and how confident at the end of the day I am that it's going to go back up to the 530s, 540s, 550s at least. So I'm in Netflix. I'm in, excuse me, guys. I'm also in, again, Fastly, and I'm in Workhorse here, which CEO of Workhorse, we won't get into it here. It'll be too long of a discussion, but CEO of Workhorse, he was on CNBC last night, I believe. Stock was up after hours. Some good news around the company is coming out. Go do some research on that. But I'm still in Workhorse. Earnings coming out here on the 10th or the 11th of August. One of those two dates. And I'm in at about 1640. And I'm just riding out my shares at this point. This is another one, like Netflix. It's a longer-term swing trade for me. So that's pretty much it when it comes down to what I personally did today, what I am up to at this point. Let me know down below in the comments what you guys did. I would absolutely love to know and interact with you guys and just chat and see what you guys have been doing. And if you haven't joined our free Discord chat, now's your chance to do that. It's free. Go down below and also join our Facebook group. It's also free if you want to talk to me and a bunch of other investors and traders. Literally 24/7 around the clock, we are talking and interacting. So let's get into some stocks here that came up to my attention and some ones in general now that I'm looking at to trade as we're getting deeper into August. One of them is Illumina. And I believe this is one that is held by Ark Invest. I don't know if it's all of the ETFs, the 5 active ETFs that they have, or if it's just 2 of the 5 or whatever. But I believe, if I'm not mistaken, this stock is in those ETFs. And if you guys actually want to see an in-depth video on those ETFs, I made an Ark Invest ETFs video a couple days ago. I'll link it down below in the description. Feel free to go check that out if you want to learn more about these ETFs that have been returning ridiculous returns, 30, 40, 50% in some cases. It's just insane. So that's linked down below in the description. And ILMN, and I'll be honest, guys, I don't know a crazy amount of this company, and I'll just read you the description here from Yahoo Finance. This company provides sequencing and array-based solutions for genetic and genomic analysis. Its products and services serve customers in a range of markets, enabling the adoption of genomic solutions in research and clinical settings for applications in life sciences, oncology, reproductive health, agriculture, and other emerging segments. So it's kind of a healthcare company at the end of the day, a bit of I don't know how to classify it, but it's an interesting company. And it came to my attention because it dropped from $405 down to about $355. And you guys can see, I mean, we're showing some support, some consolidation today at about $340, $350, maybe telling us that, hey, this could be the bottom in the short term. And you guys were saying, Stas, is it a dip buy? Should we buy now? And me personally, I don't like buying into a stock. Let me tell you this, especially after it tanked like this. Not saying that I'm not going to buy into it, but I like giving it some time. Let me rephrase that. I don't like buying in right away. I like giving it some time to see if it consolidates here, if it drops even further, right? Because there's a chance that Illumina, yeah, I mean, we're consolidating a bit here. Let's say you jumped into the stock today. There's a chance that we see another gap down on Monday. We break 340, we go to 320, right? And then you end up, ended up holding the bag. And I'm a little bit guilty of this as well with my FSLY trade, right? You can argue, Stas, hey, you got into FSLY a bit early, and the truth is I did. And we saw the leg down today, and now I'm down a decent amount of my positions. So that's what happens, guys. Be careful with Illumina, and there's a reason why they did poorly. I mean, they reported EPS of 62 cents, and that missed. That missed the 67-cent estimate, and revenue came in at $633 million versus $679 million estimated. So they missed EPS. They missed revenue. I mean, did they guide down? I wouldn't be surprised. Maybe they guided down. Okay, we're seeing some price cuts here from analysts. So these are some reasons that, yeah, I mean, the stock is taking a beating. And does it mean that it's not going to recover? No, because the market's irrational. Sometimes it will push a stock up even though it missed earnings, right? The market forgets quickly. This thing could easily go back up to the 400s. But back to what I said before, we have to be patient, see what it does, see if it consolidates, sees another leg down, which would be bad. And then we could end up maybe getting into it, right? So this is an interesting one. I'm going to add it here to my swing watch list so I could keep an eye on it next week. But for me, again, it's not worth risking something, especially on Friday. It's not worth getting into a position too early. I'd rather give up some gains and get in on the confirmation than get in early and then get trapped, guys, right? That's kind of the way I'm viewing it. And another one I got a lot of questions on was AYX, another company that I'm not too familiar with. And this is a perfect example of a company that saw another leg down. We saw some consolidation after hours yesterday heading into pre-market, but ultimately if you bought in on the dip after market hours yesterday, you would have got burnt because it saw another leg down today, and the downtrend is still intact. It seems like we're down about $60 from the highs, which is insane. And this went down because it saw, I believe the guidance was off par. And EPS beat. I mean, EPS came in at 2 cents versus the 14-cent loss. Revenue came in at $96 million versus $94 million estimated. So they beat there, but what investors and traders hate is guidance falling short. And guidance ended up falling short here. We can see full year 2020 sales. They expect them around 460 to 465 million versus the 505 million estimated. So that is why the stock's down. No doubt about it. It's down 30%, guys. So I'd be careful. We're seeing some price target drops, although many firms are still maintaining a buy rating on this particular stock. I'd still be careful. We'll see what ends up happening. And again, same with the previous one. If we find some support, some consolidation, we might be able to get in on this massive drop. But until then, it is a falling knife, and I'd be very careful. And another one that's like this is INTC. We talked about it. It's dropped a massive amount, about $13. We held about $45 support. We rallied a bit from there, which did show, excuse me, guys, it showed some good initial signs there, but now we're seeing some resistance under that 50 SMA and maybe a retest back down to $45. So if we break this level, we might be seeing another leg down on INTC. So the moral of the story is be patient, wait for confirmation, and wait for the stock to play out. So I'm watching these three that have taken massive dumps as opportunities, but we're waiting to see and waiting to just wait for that confirmation for the breakout. And GDX, Gold Miners ETF, we saw a healthy sell-off in gold today, down $23 an ounce, down to $20.46. GDX saw about a 3.4% sell-off, down $1.50, now trading about $3 off of its all-time, or not all-time highs, but its highs here on the 4-hour chart. And this dip opened up around 7%. So I'm looking at this. I've been making a lot of money on GDX over the past couple of months. Gold in general, been making a lot of money there. And I'm interested in buying this dip. The trend's holding as of now. We'll see what happens on Monday. If we end up rallying up, let's say 43.50, that could be where I end up picking up some shares. And the video game stocks today took a beating. Activision down 5%, holding right around $81.50, $82. bucks as a support at a higher low here on the 4-hour chart. This looks pretty promising. I mean, we're down about $7 from the highs. This is a dip buy that opened up around, or a dip that opened up around 8%. It could be a buy heading into this week, but I'm looking to see it hold 83 bucks first, and until then, I'm not rushing into it. And another one here is EA, another video game stock, Electronic Arts, and if it holds 142, which it seems like it is, right? 147 could be a target that we get back to. And ultimately, 3 years ago, we saw video game stocks get crushed. EA had a high of 151 bucks. So, I mean, if 140 holds, 150 could be the target here on this particular stock. SQ Square also got hit. And this is another one that I actually, made a deeper dive video into. Go check it out. I'll link it down below in the description box. I uploaded it yesterday going over their recent earnings report, growth, revenue growth, whether or not I think it's too late to buy the stock long term and so forth. Go check it out. Link down below in the description box. And we saw about a 4.5% sell-off in this stock today. And when it comes down to a swing trade, guys, I really would prefer Square at around 135. That would be a very nice buy-in price for me, right around this 50 SMA on this 4-hour chart. And until then, I'm going to be on the sidelines for Square. But yeah, let's just be patient and see what happens there. Google is another one that I'm interested in. If it can take out 1520, if it can hold 1500 at least and show some sort of upwards break there. And, it's about $100 off its highs. This does have some potential, but with tech being weak, it obviously dragged down Google today as well. Although Facebook was up $3, man. Facebook is crushing it, guys, here as it's rolling out Reels, which is a competitor over there to good old TikTok, right? So Beyond Meat is another one here. It was pretty choppy today. I got a question on Beyond Meat, and quite honestly, guys, I'm bullish Beyond Meat long term. But as a trade, I need to see it take out 137. I mean, 137, we struggled there. 135 to 137, all of this year pretty much, right? Other than that breakout to those, 4-hour chart highs at about 167. I mean, other than that breakout, we've struggled at 137, 135. So I'm thinking if this breaks, and you guys can even see it for yourselves, the past couple of days, we've been struggling there, right? Choppy under 135. If this breaks, I'm thinking the next target could be 145. So I'm being patient and seeing what happens here with Beyond Meat. Ultimately, I think it does get there, but it might take some time. And another one here is Upwork, which, oh my God, guys, I forgot to mention Upwork. This is one that I took a position in this morning, a very small position this morning. I was looking at my notes. I almost forgot to put it in my notes. That is why, yes, Upwork, guys. I almost forgot because this is one that I was watching yesterday, right? We made a video going over beaten down stocks, and Upwork was one of them that had pretty solid earnings, but they didn't really do that great when it comes to guidance. Their guidance was decent at best, and the stock sold off. And quite honestly, I saw it as an opportunity, and I got in this morning. I can't believe I almost forgot to mention it. Yeah, I'm in Upwork. I believe it was at around like 1465. But I'm long this company. I'm open to holding it for a couple months as a swing trade. I might even start adding as a long-term position. We'll end up seeing what ends up happening there. But I'm in Upwork, almost forgot to mention it, and I see potential in this one going up to $15, $16, and honestly back up to the 17s, 18s at some point. So I'm in this one. I'm really bullish on it, and that's pretty much it for the video, guys. I hope you all enjoyed it. If you did, hit that like button for me. Consider subscribing to the channel. Claim your 2 free stocks from Webull, valued up to $1,400. Again, all you have to do is deposit $100 using my link down below, and you get those 2 free stocks. And don't forget to join our Discord chat as well and our Facebook group. Those are free of charge to join. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out.